Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. You know, one of the interesting things about being in public practice is you get to hear all kinds of interesting stories about tax advice that people give each other. Sometimes I think it's over the back fence, in the neighborhood. But there was an article written by Tina Oram of NerdWallet that was published on March 4, 2018. And the name of this particular article is 5 Pieces of Popular Tax Advice That Are Actually Baloney. And this is definitely worth reading, but I thought I would take a few minutes and kind of go through the top ones that they say here. And the first one they mention is bad advice: get an extension, you'll have more time to pay your taxes. And this one is total baloney. And I get this question a lot when clients will come in and say, hey, Ralph, I don't have time to get all my paperwork together. Let's go ahead and file an extension. And that way I don't have to worry about getting my stuff together. And I say, well, that's fine. Here's an extension form. And one of the things I learned a few years back was on my extension form, I actually have a disclaimer that says, hey, listen, even though you're filing an extension to prepare your tax return, the actual payment is still due by the tax deadline. And this comes as a surprise to some people. And they say, well, Ralph, if I needed time to extend my tax return, how do you expect me to pay it? And I said, well, what we've got to do is we've got to determine, what you think your tax liability is going to be. And of course, the advice I usually get from them, or the response I get from them is, well, if I knew that, I'd just go ahead and file. So guess what? Right answer. And if you don't have enough cash to pay your taxes, hand over what you can by April 17th. And then what you're going to want to do is request a payment plan. That'll allow you to avoid the penalty for late payment and late filing payment. Now, if all else fails, you can get an extension, and that will certainly avoid you getting fined for not filing on time, but it doesn't help the payment on time. Next piece of bad advice: don't get an extension, you'll get audited. And I hear this one all the time. Ralph, I definitely don't want to get an extension because, even if I just have to throw my tax return together at the last minute, I've heard that, if you file an extension, you're going to get audited. Now, I don't have any personal knowledge that is true. In fact, in this article, it says, for some reason, this is just one of the ones that comes up all the time. Gibbons says, the result is that people rush and throw together a tax return in April, even if they don't have everything in order. They think that somehow this is going to prevent them from getting audited. But frankly, I don't see this as being any good advice. Frankly, you need to get an extension if you need the time to get your items in order. You're better to file late and correct than to hurry and make some mistakes. So this is really a silly thing. And what the things you can do is, if you've got to try to figure out, how much you're going to owe, use one of the tax calculators that are available. There's plenty of them online. NerdWallet mentions one they have here. And, I really feel like this is something that you shouldn't do, just rush to get it done. Now, the next one they talk about here, and this is a very common one, and it kind of cracks me up sometimes when I hear it. Bad advice: you should buy real estate for the tax breaks. Well, here's why that's not a great thing. And that says, although mortgage interest and property taxes can be deductible, buying real estate has to make sense for other reasons. One of the things that cracks me up is I'll have a client say to me, hey, Ralph, I was thinking about paying off my mortgage, but I don't want to do that because then I'm going to lose a tax write-off. And that triggers a discussion that goes like this. Okay, Mr. Jones. I use Mr. Jones a lot. I apologize, but poor Mr. Jones is getting beat up by me. But anyway, Mr. Jones says, okay, Ralph, I've got $25,000 left on my mortgage. I was thinking about just, paying that off, but then I'm worried about the tax write-off. And so it goes something like this. Well, what is your interest rate you're paying on your mortgage? Well, it's 5%. Okay, so if you are able to deduct the 5%, then you're effectively still paying a portion of that interest. And they go, how does that make sense, Ralph? I said, okay, it works like this. So let's say the interest rate is 5% and you're in a 20% tax bracket. Well, then you're effectively saving 20% of that 5%. Well, guess what? You're still paying 4% interest. So unless your investments are earning you at least 4%, then you're much better off to pay off your house and not have that mortgage debt. And that's a discussion that sometimes, takes a little time for people to understand, but I always tell people to make the best financial decision first. And once you've made that best financial decision, then you can go ahead and try to make the best tax situation fit with what your financial decision is. A lot of times I'll hear people say, well, it's getting close to the end of the year. I better go out and buy some stuff so I don't have to pay taxes. Well, and the first thing I say to them is, well, that's true. That's a good idea. However, make sure it's something you actually need to buy. I've had clients come in and say, Ralph, I stocked up on this and this and that. And I say, okay, well, that's great, but you're not going to use that much toilet paper over the next 10 years. Does it really make sense to go out and spend that much money? The better advice here is to ignore people who make taxes a number one reason to buy real estate. And you also have to think about, with the new tax changes, are you even going to be able to itemize? The standard family goes from $12,000 to $24,000 in itemized the standard deduction. So there's going to be a lot of people that aren't even going to qualify for taking itemized deductions moving forward. And if you're paying interest and property taxes with the idea that, well, this is going to at least be a tax write-off, I'm afraid you're not going to find that too helpful. Next piece of bad advice. Taking the home office deduction will trigger an audit. And I talked about this in part of the show earlier, and this is not true. That being said, I'm going to put a big asterisk next to that. This is true if you don't have your information provided and you're doing it correctly. Like I talked about before, if you're taking a home office deduction, you need to make sure that it's regularly and exclusively used for business. That being said, if you've got that information available and it's really being used, there's a lot of employees now that work from home, and there's nothing wrong with that. Businesses have found that remote employees actually make their bottom line better. But that being said, you're going to need to have an area that is exclusively used for business. And then what you're going to want to do is, report that square footage of that area exclusively used for business. I don't know how many times I've had a client say, well, yeah, but I have meetings in my kitchen, and then, I store products in the basement and garage, and then I do this. And I say, okay, well, that's fine. But what is exclusively used for business? And that's very important. Now, the final one they mention here is bad advice. You don't have to report money from a side hustle. And I was thinking, funny, side hustle. But anyway, so I guess what they're talking about here is, let's say you're an Uber driver or a Link driver. Anytime you make money, you're required to report that income on your tax return. I've often been told, it wasn't the murders and all that sort of thing that got, Al Capone in trouble. It was tax evasion. So this is something you want to pay attention to. Now, if you're doing something on the side, you want to make sure that you're reporting that. And then be fair to yourself, report the income, but also keep track of the expenses. Keep track of your mileage, keep track of your out-of-pocket expenses, whether it be, office supplies or anything like that. So whatever goes into putting that together, make sure you keep track of it. But also, you don't want to just avoid it, because if you've got a 1099 or W-2 coming your way because of something that you've done, you need to make sure that you are, preparing and you've got this stuff reported on your tax return. So I hope this has been helpful to debunk some of the things that people say are actually good tax advice, and giving you some thoughts about, the extension and thoughts about, does it make sense to buy real estate? And all these things are really based on individual circumstances. So I hope this was helpful.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.